Well, hello everyone, welcome back. So in this video we are talking about earned income. And if you've watched some of the preview materials, you know that there are three kinds of income. And the first one is earned income. Then we also talk about portfolio income. And then we also talk about passive income. So in your mind, visualize, these three types of income as really being really the only three ways you can make money. Pretty much every way that you make money that you can think of will fall into one of these three categories, either earned, passive, or portfolio. And we'll go through all those. This video is about earned income. So, earned income really is exchanging your time for money, right? When we talk about earned income, we're really talking about money that you get from working at a job. Okay, whether you work for a company or whether you work for yourself, it doesn't really matter. If you are physically working, if you're physically doing work, that's earned income. Okay, so tips are earned, overtime is earned, bonuses are earned, everything that you can think of that comes from an employer, or even, like I said, your own business. If you are actually doing the work to generate the money, falls in the category of earned income. Another way to tell if something is earned income, if you're not quite sure, is what would happen if you stopped working? Would this money still come in? Would this money still be generated and be delivered to your mailbox or to your bank account if you stopped working? If the answer is yes, then it's not earned income. It's some other form of income. Most likely it's some sort of portfolio or passive income. But if the answer is no, that the money does not keep coming in, then it's earned income. Again, if you stop working and the money stops, it's earned income. If you stop working and the money keeps going, it's not earned income. It's some other form of income. Okay? So think about most of the people who you know. Parents, neighbors, friends, your friends' parents, people you went to school with. For most of them, I suspect that earned income is the most common form of income that most of the people you know are generating. You might have a few people in your network that have figured out how to generate and create some passive and portfolio income. Most likely these folks have small businesses where they are not necessary to the day-to-day operations. Maybe they have a substantial investment portfolio. Perhaps they have some rental properties, that kind of thing. So again, it may not be 100% of their income. It doesn't have to be 100%. I mean, it can really be anything. But the idea is that over time, start to grow these passive and portfolio income levels as a percentage of your total income. So if this bar represents your total income, today this whole thing might be earned income. 100% of it might be earned income. But over time, if you can start creating slices of it that are passive income, maybe here's a little piece of portfolio income that you can create. Here's another way that you created some passive income, which we'll talk about in another video. On the you'll see them in the video series. But the more is if this is what you need, if this is the amount of money you need to live, and to live the way you want. Again, it doesn't matter to me how you want to live. You can live as a beach bum or you can be a jet set. But if this is your total expenses and investment dollars and everything that you need to bring in, what I'd like you to begin thinking about is figuring out how much you can generate using non-earned income, non-earned income, in other words, passive or portfolio income, and really minimize this amount of earned income. Now, it still could be that you're making $1 million of earned income, but wouldn't it be great if you could also make another $1 million of passive and portfolio income? This number might also be $10,000 of earned income and $10,000 worth of passive and portfolio income, which is totally fine if you can live on $20,000 a year, right? It's not about the number, it's not about the amount. It's about the ratio here between passive and between earned and the other forms of income. again, with the idea that financial freedom comes when this piece down here, the non-earned income, is enough to satisfy your entire life. I mean, think about it. If you're making earned income, if you want to double what you make, what do you have to do? Well, it's one of two things. You either have to double your hours, or you have to double your dollars. All right. If you're already working 40 hours a week, if you're already working full time, my guess is that this isn't really an option. I mean, it's not a sustainable option to go, try to work 80 hours a week for the rest of your life just to double your income. Now, doubling your dollars might be kind of challenging. Most jobs, pay a market rate, so it's very difficult to go to your boss and say, I make $20 an hour now. I'd really rather make 40. He'll just laugh and send you packing. So it's this one's possible. Probably, if you had to compare doubling your hours or doubling your dollars, it might be more likely for you to try to double your dollars. Maybe it means going and finding another job. But even then you're capped out. So then, once you doubled your dollars once, what if you want to double them again? At some point you reach a level where it just gets very, very challenging to do it by working for earned income. Okay, so that's one of the limitations we talked about in the intro video. Earned income has three problems that I see. The first one is time, right? Again, this goes to this piece right here. Your time is limited. You only have so many hours a year or a week to sell. The second one is taxes. We'll talk about it in more detail in another video, but earned income is the highest taxed form of income. There's really no ability to control how much tax you pay. You notice when you get your paycheck, the taxes have already been taken out. Yes, you can fill out a different form with your HR department if you're working for a business to have them take out different amounts of taxes, but that's really the only control. It's very modest control. It's very minimal control over how much taxes you have taken out. Plus, you don't really have much ability to tax plan. The deductions are going away. The deductions are phased out. Pretty much the only thing that's left for most people is mortgage interest and charitable giving. But there's really no other way to do any sort of realistic or reasonable tax planning with earned income. And the last one is that it really is temporary, right? I mean, you could be fired, you could be laid off, you could become disabled, you could die. I mean, there's all kinds of reasons why working physically for money is inherently temporary, right? It won't last forever, and that's a critical distinction, and one that I want to make sure that you pick up on as we go through the rest of the materials when we talk about income statement wealth versus balance sheet wealth. I call it income statement prison, because if you get to a point where your earned income is really high, guess what? You can't stop working. Your lifestyle is being supported by this earned income that's temporary. So think about building an expensive lifestyle on a form of income that is the worst taxed and at best is temporary in nature. Okay, I think part of what we teach here is just the concept of building more of this passive and portfolio income that you see down here, right? Which really is more permanent. Okay, once you own a piece of real estate, provided you keep the real estate up and provided you can keep a tenant in there, that's really permanent income. That income will continue to come in month after month, whether or not you're physically working for it or not. Someone else is physically working for it, right? But you can change those people out. So if the one person disappears, becomes disabled, or dies, you can put another tenant in who will start to pay the rent. So it doesn't rely on your physical work to do that. Okay, so I think that really covers what I wanted to cover for earned income. We'll see you in the next video.